Lincoln Productions. David Lincoln Productions. David Lincoln.
What's up, guys? I wanted to come on and talk to you for a few moments this morning and kind of update you on some stuff I'm thinking about, particularly the craziness yesterday with the oil markets and just some word of caution about some of these oil products. And the main ones people have been talking about a lot have been USO and UCO. These are products that tend to contain oil futures, and I just want to caution people to be very careful if you're trading these sort of products. Even though even though USO is not leveraged, it still exhibits the contango issues that cause it to be extremely sluggish. Hold on, I'm just looking up here to make sure that I am actually live here, because it's hard to tell if I'm actually live or not. Let's see. Yeah, it looks like I'm live. Cool. Anyway, yesterday we saw crazy price action. Let's take a look really quickly and review what happened yesterday with the oil futures. I'm going to pull up CL here on my charting here. I'm using Thinkorswim. If we look at the 5-day, yesterday in the morning, we saw, way before the open, we had this futures get down to just over 11, and then the open yesterday we were back up, but then we saw this other low of 6.5 per barrel of oil, which is just really a black swan, unprecedented event. And yet the VIX really didn't. I mean, VIX was up, yeah, but the VIX really did not explode like you might think it would. In fact, the market has largely just shaken off this craziness in the oil markets. Now, there's a lot of speculation behind the scenes about whether USO, this main oil ETF, would survive actually yesterday, and it was actually trading at a premium to its net asset value. And what happened is that they were blocked from making new shares for a while, the market maker. So remember, with an exchange traded product, what you have is you have our authorized participants who are able to create blocks of new shares as needed, and that was halted for a while. They were not allowed to make new shares. In fact, these products themselves were halted several times yesterday. Now, USO is is not a leveraged product. It's just one times. UCO, however, is a leveraged product. And so if you get a day where UCO is down, if oil futures are down 50%, this thing can go to zero. So very scary out there. And I would caution people extremely to be careful with these products. Now, which brings us back to our old friend contango. Now, even though USO is not leveraged, it still is going to be suffering from the effects of contango. And what I'm going to do here is I'm going to pull up I'm going to go to the oil term structure here from the Mercantile Exchange, and we'll take a look at it from the CME here. So let's see if we can. Here we go. So what we're looking at here, and I'm going to bring it over to the screen so you can see it here and get out of the way, is these are different oil futures. So you can see the June future now, 14, July 21, and August upward. Now this is a term structure which is in contango, and that means people who follow my show will know exactly what that means, but just for a refresher, that means that the prices of, as you move out in time, the prices are higher in the futures. And so what this means is that as the USO rebalances every day, it's going to be selling some of these front month futures and buying the farther out ones, and that's going to create decay. So even though this is not a leveraged product and isn't going to exhibit like sort of beta drift, what we call decay, it still is going to decay very rapidly. And you notice here the extreme price difference, 14 versus 21. That is a huge price difference. So holding on to these products for any length of time is not advisable, and you could very well get into a situation where you buy USO or UCO for that matter, and you are right, oil does go up from there, but the product does not go up. It goes sideways or even goes down over time due to the fact that there are these forces in play that are going to make these decay. Most drastically, this very, very sharp contango in the oil futures. So what this leaves us in a situation in most basic terms is that there's not an easy way to, when you see oil trading $6 a barrel, there's not an easy way to capture that in a trade and say, okay, well, I'm going to buy that $6 a barrel and I'm going to hold on to it because I know oil is going to be higher in the months ahead. There's not an easy way to do that right now. And logically thinking, it turns out who would actually want to sell you oil at $6 a barrel or the trade? Obviously, you could go out and buy the physical oil and put it in your garage or something. A lot of people have been making that joke the last couple of days, like, well, if oil prices are negative, then someone's paying me to take the oil. Let me just take a bunch of oil and I'll put it in my garage and I'll hold on to it. Well, indeed, this is an issue with the term structure. When you're looking at futures on a commodity, people use futures to hedge things, but actually taking physical delivery is something that traders, don't do, but people who are actually involved in the industry for these products would do. Think of corn or pork bellies or something like that. Nobody wants to take physical delivery of actual oil right now. And that's one of the main reasons why May futures were negative. Now, we've heard many reports of oil tankers off the shores of the U.S. that, may or may not be allowed to enter the United States. This situation will sort itself out. The supply, we have excess supply coupled with not hardly any demand because everything's shut down. And I think that's the main driver here is just everything's shut down. There's not a lot of demand for these oil products. And so we're in this situation right now. But, the way that the market has reacted appears that people aren't super concerned. They feel that this will sort itself out at some point. But my point to you folks is don't get caught in the trap of thinking, oh, well, I can buy USO and as oil rallies, I'll make a bunch of money, because it is a rigged game, and not rigged in that someone's doing something sneaky to take your money, but rigged in the sense that because these futures are in sharp contango, it's not going to work for you buying that most likely. And when let's look once again at that term structure. And it kind of makes sense if you think about it because, in June, nobody wants oil in June. But according to this, people, as we move out in the months, people are going to want oil then. They just don't want it now. And that really, really explains the shape of the curve right now. Now, this term structure is always is often in some sort of contango, and that's just due to the fact that it costs more money to store oil for a longer period of time than a short period of time. So storage costs go into the equation here. That's different from the VIX term structure, for example. But I just wanted to come on and talk about this a little bit. I know there's people out there that are going to say, stick to the VIX. You're just confusing the situation. But I just want to explain what's going on and what everybody's talking about in the rest of the market right now, which is this oil situation. Let's take a look, however, now that we're on the subject, at the VIX and the VIX term structure, because we seem still stuck in this certain area where we are in backwardation and can't seem to come out of it. the market was moving around a lot the last few days, more than it had been, and that's been justifying a higher VIX. Meanwhile, we're still upside down in this structure, and it's pretty surprising to me that we haven't found a way back somehow into contango after quite a long period of time, but we just kind of haven't. So if we look at our term structure here, we can see it looks the same as it always does, but you kind of have to dig into the numbers here. We can see that we are inverted. Now, the VIX isn't too far off the front month future, but as you move out in futures, it is farther off. If we go out to the DEES future, we're 13 points away. However, 13 points seems narrow from what we've been seeing before. So we have been sort of moving in the right direction with the term structure, it seems. And so let's talk about some possible strategies. Now, I did kind of an interesting strategy yesterday, which was when the market was down and SVXY was down, I bought some butterflies. Now, what a butterfly is essentially is you're isolating a certain area as your target for where stuff is going to go to. And for SVXY, let's pull up the chart here. Now, we know that SVXY is going to slowly rally as the market comes back and as we go back into contango, as volatility comes in and these products move back into contango and we start to decay, SVXY is going to rally. Now, the only question is when is that going to happen? Not will it happen, but when will it happen? And so let's look at a chart here. If we look at a year chart of SVXY, we can see it came from, I'm just going to try to get rid of everything except the chart here for a second. So SVXY came from up around in the 60s, right? And it just crashed all the way down back. It got down to 24. Now it's kind of coming back. So I went ahead and I purchased a butterfly, and I purchased a 50, 70, 90 fly. And the 50, 70, 90 fly means that I'm putting a price target that SVXY will be between $50, which is up here, and $90. And I went way out in time. I went out to June of 2021. So in 430 something days, so I'm betting in like a year and a half, this will be somewhere between 50 and 90. Now that's a pretty wide bullseye target. And I believe all we need to do is come back into contango at some point, and it should be easy to hit that target. And the beautiful thing about this butterfly is that they're very cheap. But the market's all over the place. But when we get a nice pop in the VIX, sometimes you can coax these butterflies out of people for very cheap. Now, I purchased this June fly for an average of about 78 cents, okay? And so all I need to do is for this to get closer to 50, and it goes way up in value. But this pricing bounces all over the place. Let me pull up just the trade that I have on here. You can see it in the bottom of the screen, and it just, like I said, the pricing's all over the place. The midpoint in this was anywhere. The midpoint was $2 at one point today. Yesterday, when I put this on, the offer was $1.04 for this trade. Let's pull it up right now and see what it looks like on the screen as far as the offer. So that's the wrong one. Let's see. And the thing about like a butterfly or this sort of trade is that this is a long-term trade. It's going to be hard to get out of. So it's not something you want to trade in and out, in and out, in and out of. It's something that you want to put on as a long-term thing that you're just going to leave. So I wouldn't recommend using like a lot of your account on something like this, but it is something that you could make multiples on your money on over time. So here's the trade right here. And right now we're showing a midpoint of $1.18. Once again, I put this trade on 20 by 40 by 20, and I paid an average of 80 cents for it yesterday. But it's something that can go, if we're in the middle of this butterfly, it's something that can go way up in value. So So I like it as a long-term idea. The other idea I have as far as shorting volatility for, in the next couple of months, things kind of coming back in line and us going back into contango. Let's take a look quickly at the VXX chart over the last little while here. And we can see here's the price action over the last year. Okay, so we were hovering in the 20s, and we got this huge spike up to 78. Now we're back to 45. So I'm placing bets that we're going to move lower over the next little while. Currently, what I have on is I have the July 40-36 put spread. I paid $1.99 for this. You can see my trades right here. So once again, the July 40-36 put spread, and so we're looking for this basically to move lower. And it doesn't necessarily have to get to the target. This is just a way of putting a short delta on, or a short in VXX that is a limited risk way. So I know that if VXX spikes to the moon, the most I can lose is what I paid for this trade. But if all goes according to plan, we can double our money in 80 something days. Let's see. So July expiration is in 86 days. So it's not necessarily that this trade stays on the whole time, but we've established a short in VXX with it. Now, I put this trade on 18 times this morning, and I'm showing my Greeks of a delta of short 133. So it's what that means is this is the equivalent of me being short 133 shares of VXX right here. So for each dollar VXX goes down, I make $133. For each dollar it goes up, I lose $133. However, it has the advantage of the fact that in a huge spike, the most I can lose is what I paid for the spread. And that's a big advantage over just being short VXX, because nobody's going to come tap me on the shoulder if there's some big spike and say you need to deposit more money in your account, because it's a limited risk trade. So this is what I really like about trading spreads is I know what I can make, I know what I can lose. What I can lose is each time I put this on, I can lose $200. And because I basically paid, it's a $4 spread, I paid $1.97, which you could just call it $2. So I paid $2 for a $4 spread. So the most I can lose is the $2 I paid. The most I can make is doubling my money. And we have 86 days until the expiration of these options. So anytime in the meantime, if things move my way, I could take this off. Or if plans change, I could take this off. So that's kind of where I am and what I'm doing right now. I'm watching closely this oil stuff, but it's really kind of sketchy out there. And so I would caution you to be very careful about jumping in on that sort of thing. Let's see if we have any questions in the live stream here from folks. Good morning, folks. What is going on? What's up, Al? What's up, Spencer? Ooh, Quentin Tarantito is on. Nice. Esteban Peralta. What is going on, my friend Esteban? Are you still there? Nice to see you. I hope you're safe during this quarantine period. Of course, Esteban is a friend from the real world of mine. Successful businessman, etc. Now, okay, so I see some people talking about the situation with negative options prices, and I don't have a clear answer on this for you right now. This is the thing we were talking about over the last couple of days, that if you sell puts in on futures specifically, I know that if you sell options in USO or UCO, that those will not go negative and you don't have to worry about stuff going negative. But I'm not positive about if you sell puts in directly on the futures on oil, if you are going to be responsible if these things settle in a negative area. So I'm not sure on that. I would be extremely careful about trading this oil stuff right now because it's just crazy out there. I would be very careful about trading UCO or USO as well. If you're going to get long these things, I would acknowledge the fact that there is some sort of chance out there that these will blow up and you'll lose all your money if you're long these. If VXX spikes to the moon, will you just hold to expiration? If VXX spikes to the moon, I will hold because spikes usually last at most 48 hours. Now, we've been in an extended spike. That's not the usual thing. So I know that when you listen to me say that spikes usually last 48 hours, it doesn't seem like that because we've been in an unusual situation. We're in this extended spike for quite a long time. And let's see, Brent, thank you so much for your support. USO options halted. Let's take a quick look on the screen here and see if we can verify that. And let's see. If I pull up my time and sales here, the stuff was all over yesterday, was halting back and forth. All right, so if I pull up my time and sales, so I'm showing stuff trading as recently as 10:23 here on the screen. So I think that means it seems that the stuff is open right now. Yeah, so let me see if is that showing right for you? Yeah, so if you look behind me, you can see stuff, the time and sales printing right now for USO. So I believe it's open at the moment. Who knows if it's going to stay open? Now, UCO did have a reverse split, and that happened yesterday. UCO, the reverse split, 1 for 25. So it went from, I think it closed $1.31, but we had such a big down move in oil that it ripped lower. That is possible, Brent. I'm reading what you say here. They've stopped new opening orders for UCO, possibly. That is entirely possible. I know that for a while they were not allowing people to trade any opening orders in CL, the futures on oil. So your results may vary depending on which platform you're using, or it might be for all users. And that illustrates a good point for everybody to realize, is that this stuff, we're in crazy times right now. So you want to be really careful here, because stuff can halt, or they can say closing only. Closing only isn't as much of a panic as some of these other things, but you don't want to be putting yourself in a situation where you have a bunch of your capital locked up and you don't know what the deal is. Like, stuff's halted, it doesn't reopen for a long period of time. So I would be extremely careful selling options in this stuff. And I know there's this like herd mentality to jump to whatever's hot at the moment. This is hot, let's go do that. That's hot, let's go do that. That is not advisable. It's a good way to separate you from your money. So I would say be very careful. From what I can tell right now, the options are trading. I don't have an answer for you, Brent, on whether it's closing only for those options. I mean, I could try to play it as a trade, but I don't want to do that. Okay, I want to answer this question here. Dazbuff, what mechanism will get for the VIX to go back into contango? It's not really a mechanism, I would say. The VIX just needs to move lower, back down through the futures, I would say. And, what price does the VIX have to move lower to for this to happen? Well, that's kind of open to speculation. But if we look at the chart here, if the futures didn't move at all right now, and the VIX, let's say for some reason the VIX just gapped right now down to 30, right? It would be below all the futures. And that would be, we'd be back to at least flat. So if we kind of just think of this chart, when we look at this chart, we know that as the VIX moves down, each future is going to move down, right? And the front months, the closer month ones are going to move down more than the back months, but the back months are going to move too. So if right now the VIX moved from where it is 43 down to 30, we wouldn't be back in contango, because everything would just kind of shift down. It would flatten out but shift down. I would say that if the VIX went right now to 25, we would go back into contango. But it kind of just needs, we need to either, well, the obvious mechanics of it, we either need the VIX to go down or we need the futures to go up. And the futures don't seem to want to just march up above the spot price of the VIX. I was thinking for a while that if we just kind of stayed at this level, these futures would eventually arrange themselves above the spot VIX price, but that really hasn't happened. What we've seen happen is that as the VIX has moved lower, the whole structure of backwardation has kind of moved lower with it. It's flattened out to some extent, but it hasn't come out yet. So we kind of have to wait and see, but the short answer for what it's going to take to go back into contango is for the VIX to move lower. Yes, Luck and Coffee is a good example. For me, as a, if I'm trading something and it gets sketchy like this oil stuff does, I just get out of it and I just close my stuff. It's not really worth it to me to to make a little bit of money to put on some trade that I don't know if I'm going to be stuck forever. The Carl Orbmaster, the October contract has a little bit of a dimple in it. That's, of course, due to the elections. The elections occur before October expiration, even though they're in November. So there used to be a bigger dimple there, but there's a little one, and it's just kind of in respect to the elections. It doesn't, so little trades out there in October right now that doesn't really, these back months, it doesn't mean all that much whether one is up by 50 cents or down by 20 cents. They have it arranged that way in respect for the elections, but nothing's really trading out there hardly at all. In fact, if we pull up barchart.com and we look at just volume figures for the VIX, you're going to see that there's really not a whole lot trading out there. Here, if we look at October, 300 contracts have traded today versus 10,000 in May, 5,000 in June. So one contract has traded in December. So yeah, those futures do exist, but they're not really key to the equation of what is going on right now. Okay, so I want to pull up this guy because, and let me make sure I get the right for you guys to follow. He is I don't know if he's current or ex-Goldman Sachs guy, but good guy to follow, William Mead. Let me see if I can find the link to it, and I'll put it down in the description. Has had a lot of insight on what's been going on with oil, and let's see, Will Mead. So let me put his Twitter up right here. Former PM at Goldman Sachs, founded $1.4 billion hedge fund. He's had a lot of tweets talking about oil that have been really an important thing to follow for me recently. So let me put the link to him in the stream here. Let's see, Carl Orb. I bought a USO lottery ticket in the form of a $1 put on USO, turned 80 into 150 in 10 minutes. That's awesome. And once again, if you're buying options, if you're paying $100 to buy an option, then you know what your risk is. You know that maybe something happens and that $100 gets caught up for a while, but the most you can lose on it is $100. So if you want to take risks, then that's a good thing to take risks in. As traders, we are in the business of taking risk, and different people have different levels of comfort with that. However, I would prefer to stick to become an expert in one specific thing, stick to that, and work your systems in that. Just jumping around to different products all the time is not going to serve you well. And like I said, this oil stuff is very, very volatile right now. There's certainly money to be made in it, but if you're just finding oil as a product right now, it's probably not the best time to jump in on it, would be my advice here. All right, so please do check out Brent's YouTube channel. It's been exploding. Let me put it up here. He has, I think he's probably passed me by now, but definitely has been exploding with some excellent content. Let me find it here, and I'll put the link in the description here. Some great explanation, not only of VIX-related stuff, but just portfolio management and all aspects of really finance. Check him out. I'll put a link in the description here. And cool stuff. Can I put the link to the VIX contract? Yes. So what I was pulling up is bar chart. Now, of course, barchart.com is delayed a little bit, so keep that in mind when you're looking at it, but we'll put a link to that up here as well. And just something to check out. But remember here, and we were talking about this before, but I just want to reiterate once again that this, we do expect to see these VIX products move down. We do expect UVXY and VXX to move lower, and I have a short on these right now, and I will continue to stay short these. We expect them to move lower. Obviously, there's some bumps in the road, but if you look at just a chart of, let's do UVXY, for example, 1.5 times leverage product, we see it's well off the highs, and it certainly could pop around, but the solution to that is if you can put some sort of little bit longer term type position on, we expect this to return, approaching a more normal situation. And remember, as soon as we get back into contango, this is going to cause this to slowly decay lower and lower and lower. So I continue to maintain a short. I do have that butterfly in SVXY, and I have the short in VXX. And that is a strategy which it's a similar strategy to just being long the SPY or the Russell or NASDAQ futures, in that it's a long market strategy. The advantages of being contango decay helps you out, and if the market just moves sideways, as soon as we get back into contango, it will decay even when we're moving sideways. But I understand people who are kind of waiting for this to go out of backwardation, because we are once again in a incredibly extended period of backwardation, and this lasted a very long time. But it can't last forever here, folks. And we've seen that was a pretty scary situation yesterday, and the VIX was sluggish. VVIX, which is a measure of volatility in VIX options. When we look at the chart for that has been creeping lower. Everything's been creeping lower here, and certainly we could see more volatility ahead. But the signs are there for us to return to some sort of contango soon, and that's kind of what we're waiting on here. Hello, Marcella. Welcome. Nice to see you. Yeah, there are, Carl or Master says, one thing I noticed is that there's almost no open interest in UVXY options, so I wonder if it's hard to trade it. It is very hard to trade options in UVXY. They're going to mess around with you. They're not going to trade with you unless it's extremely advantageous to them, the market makers, so you want to be very careful with your pricing. I've been steering clear of it pretty much just because it's very difficult to put a trade on. It's very difficult to get out of stuff. If you have a clear trade, I would stick to VXX. The thing with UVXY is that if you have a clear idea that a trade that you want to put on that, say, lasts 3 months or something, then you can carefully get into that trade and just put it on and leave it. But what you're going to notice is that the prices move all over the place, so your profit and loss is going to bounce around. If you have a big trade on in there, it's going to show you one day making $10,000, one day losing $10,000, bounce all over the place. Now, you can follow where stuff is getting marked every day, but I know that it can be a source of stress for people when their pricing is moving all over the place like that every day. You'll have a day where UVXY is down and you're short, and yet the prices were really good marks the day before, and it'll show you losing money when you didn't really. What is my profit target on VXX? I don't really have a profit target. I'm just knowing that it's going to go down over time. If we look at UVXY option implied volatility, if I pull up my Thinkorswim screen once again, we can see on the right side of the screen it's going to give us some indication of levels. It's showing like 163, 150, 159. Those are pretty high levels for UVXY. Generally, we see UVXY somewhere around, like, I would say the 120s maybe. It can get down to like the 80s in the front weeks if stuff's calm. But these are generally pretty high levels. And if we go into Thinkorswim, we can look at, there's certain, let me go to a spot in Thinkorswim here. If we go to the Analyze tab, we can go under Options Statistics, and this is going to give you some statistics. So it's showing the 52-week high for implied volatility for UVXY of 300. So we're certainly off the high. I don't know how accurate that is. It's showing us that we're actually in a lower spot here. It's showing the 52-week low of 80s, the high of 300. So, and it's showing an implied volatility of 162. So that, in my opinion, it's showing that that's only in the 36th percentile, but I don't think that's accurate. As far as I'm concerned, a 162 vol is on the higher side in UVXY, but not really extreme. Okay, U.S. Oil Fund announces a 1-for-8 split. Now, let me just harp on this for a second. Splits are vastly misunderstood by retail traders, in that they think that, a lot of people think that splits automatically mean that the price is going to go higher or lower, or a split is just a mechanical thing. It doesn't. There are some occasions where it affects the price. For example, if you have a very hot stock and it splits, a lot of times the publicity around that split will encourage people to come in and buy that stock. So when you have let's say a software company that's doing really well and they split the stock, a lot of times that can be sort of a bullish signal for the stock, just because there's newspaper reporting about the split. More people are focused on that and they buy it. However, in just mechanical terms, in this case, for example, the USO splitting, a reverse splitting, it doesn't mean really anything for direction, or it doesn't necessarily mean that it's moving lower from there. We know, because we're in sharp contango, that USO is going to move lower over time, but that's not going to be magnified by it splitting. All that splitting does is it's going to help with options trading a little bit, because it's going to give you more of an ability to trade options on it. Because when you've got a stock that's $2, there's not that many strikes, and it's really hard to trade options on it. But I wouldn't go into a split thinking that that means, oh, well, because it's reverse splitting, it's definitely going straight down from there. That did happen in UCO yesterday, but it wasn't because of reverse split that it went down. It went down because the futures underlying it went down. So, if you take something away from this today, take away the fact that a split is just a mechanical. It's just it's big, just changing the. It's just like a mechanical thing. It's not indicative of the fact that something's going in one direction or another. It's just. Like nothing is created or destroyed with a split. So don't be confused on that. Like I said, if there's a lot of publicity to a split, then it can make stuff rally in a stock situation. We know that these leveraged funds, they reverse split them because these have decay and they move lower over time. But that level of decay, amount of decay, is not affected by the split. The split is just, it's just changing terms of stuff. However, the things to be aware of during a split are options trading. If you have options trading on, you probably want to close those positions before the split, because usually post-split options, residual options that are on, are going to have liquidity problems. So I like to just get out of options. In this case with USO, they're defending the price to not sink to pennies. Yeah, I mean, but Dasboff, that's entirely true. But that's the reason in every case where they reverse something, split something, they're moving the price so it doesn't go into pennies. That's the same with dries when it's reverse split. Any product, when it gets down to $1, they are and indeed with all these products, UVXY, TVIX, they always reverse split those so that it doesn't go like down below $1 and be untradeable. Certainly, I'm not diminishing your statement at all, Dasboff, but that's just true with anything that reverse splits. They're keeping it from getting down below $1. And these products, USO, yeah, it's known with these products that they will decay over time. We just don't expect them to decay as quickly as they did. I mean, UCO, yesterday it split and it was down, as the president would say, bigly. Look at this. Let me get out of the way here. It's almost like, so here it was at the beginning of 2020, it was $22. It went all the way down to $1.28. I think it closed around $1.30. They split it, and it was down like over 50% the day it split. So just a really scary situation out here. Part of the reason that they closed the fund to new issuance is just there was not the liquidity in the futures to trade this. It was a very scary situation yesterday, and there was a bunch of events that happened in a row, most of which I haven't really covered here, but I did just want to come on and just mention the action that's been going on in the oil stuff. And I certainly don't have all the answers here, but follow that William Meade guy that I put in the quotes, and do I analyze using Elliott waves? I am not a huge proponent of Elliott wave theory, so I would go to somebody else to get information on Elliott waves. I understand kind of the basic concepts of it, but I'm not a huge follower of Elliott waves. All right, so that pretty much sums it up for now. I hope you're staying safe during this crisis stuff. Remember, it's when we're wearing. This is my public service announcement right here. We're wearing masks. Not so much to protect us, but as a courtesy and to protect those around us in case we have the virus. So I went out to the supermarket here in Massachusetts in the United States, and there were some people in there who were, seemed to be very proud of the fact that they weren't wearing a mask as some sort of, I think, misguided political statement, because I have several friends who are conservatives and who are certainly supporters of the president and whatnot, who are appalled by the fact that people would go into the supermarket and not wear a mask and be very belligerent. So it's not a Republican versus Democrat thing. It's something else that's going on here. So I would advise, if you want to make political statements, going and exposing people, potentially exposing other people in the public to the virus, is just an inconsiderate thing, and you're not being a good conservative by doing that. You're just being disruptive. So please, everybody, be safe, be courteous to those around you, wear the mask when you're out in public, and I'll get off my soapbox. All right, thanks for watching, and we'll be back with you tomorrow with more action on, and like I said, I have put a short on in these volatility products. If you don't have a position on, it might be something to think about. And if we get a spike in volatility, it might be something like, for example, if you thought about, I'd like to short some volatility stuff, and you have a plan in place, like, if we get a spike, this is the trade I would like to put on, and you've thought about it ahead of time, then when we do get that big down day, you can execute, put a nice trade on, and maybe get a very good head start on shorting some of this stuff. Yes, exactly, Al. Maybe you'll find out years from now that it was, it wasn't so effective washing your hands and not touching your eyes and wearing a mask. But what have you lost in the end? Not that much. So stay safe, everybody. Thanks for watching. Thanks for all of you who have subscribed. If you haven't subscribed, you could really help me out just by pressing the like button, subscribing, and I do have that membership program. I think it's like $1.99 to sign up for YouTube membership. I have been, like, for example, the most recent interview I released early. I'm trying to come up with some perks for members. I want to come up with like a Famous Dave, like mouse pad. I want to come up with something really cool that's like Famous Dave related, limited edition, that just, if you happen to be a member at one particular moment in time, everybody's going to get one. I almost don't mind just taking any money that I get from the membership and pulling it back into something cool to give out to the members, because I really appreciate your support. So thanks for being there for me. Stay safe, everybody, and I'll see you soon.
David Lincoln Productions.